Hi, folks, and welcome back to another, hopefully, exciting edition of Money and Politics. And as always, in case you're just joining us, and there's a lot of new people coming to the channel, which I greatly appreciate. As we always say off the top, I'm not a financial advisor or a registered broker, so you have to make your own investment decisions and live with those. What we can do is try to give you some guidance based upon my years of being an investor. And as I've said many times in the videos, I've made more money in the stock market over the years than I've made in a paycheck. And for all of you who have only made money via a job, the problem is when you think about it is that you think of making money as a linear exercise, that someone says you're going to make $50,000 or whatever a year, and that your income stream is supposed to be a flat line throughout the year. That's not what happens when you're investing. And so that's the purpose here, is to basically educate you on a whole lot of concepts. We're not like, some channels, hey, just pitch penny stocks and you're going to get rich quick. I've compared investing to, growing corn. Plant your seeds and let it grow. And a lot of times that's the way it is. Now, are we going to be talking about penny stocks now and then? Yeah. And one of the most exciting ones that we've been covering since we started the channel about roughly 2 weeks ago, has been TSNP and a companion company, Forwardly. And in fact, I've told a number of friends to get in on this stock. So I'm not just pumping and dumping. If I'm wrong, I'm going to have a lot of people who are friends of mine not be friends of mine anymore, perhaps. But let's take a quick look on what is going on. And today, I was, of course, out yesterday on a business trip, but the market was down. Humboldt took a little bit of a stumble in recent days. We hit, I think it was on Monday, close to about $1.90 something. And yesterday we were down, I think at one point to about $1.25. I had one friend say he kind of panicked a bit and sold some of his shares at $1.25. This is why I say you gotta make decisions that are right for you. I'm not going to tell you not to sell. If you think you got to sell or you're afraid, go ahead and sell. But Humboldt was back up today. And what I like is that we're not having a lot of people panic. And as I said the other day, as we go up, and this is going to continue to be the case, as Humboldt goes up throughout the year, and you look at your portfolio and you go, oh my goodness, I have $10,000 I'm up, or I'm up 15, I'm up 20,000, I'm up 30,000. You're probably going to be seeing that. And the higher you go, you're going to get nervous here and there. Again, if you have to sell, you can. But as I've said many times too, if it makes you feel better, sell 2 shares, sell 10 shares, sell 50 shares. I don't know how many shares you have, but you can take a little profit off the table here and there. And then if we do have these dips, and you got that cash sitting in your portfolio, then go ahead and buy some back at a lower price. That's another good thing. If you had, let's say you had 20,000 shares for the sake of discussion, and if you have a small number, I don't mean to intimidate you, but I'm just trying to illustrate a point. If you had 20,000 shares and it goes up suddenly to whatever point, let's say it shot up to $2, and it went up, maybe from $1.50 to $2 overnight. Hey, if you want to say, okay, I'm going to sell 1,000 shares of my 20,000 or 2,000 shares, that would be for every 1,000 you sell at $2. Obviously, that's $2,000. You sell 2,000 shares, you go from 20 down to 18,000, you got $4,000 you just put back in the cash column of your portfolio. So then obviously you can go in, and if all of a sudden we get a sell-off and it falls back down to $1.70, $1.75, go ahead and buy those shares back some. You're still going to have cash left, right? Because when you purchase those 2,000 shares back at a lower price, you won't have consumed all the cash that you made when you sold them at $2. So that's one technique. Anyway, we're up 6.72% today. It closed at $1.43. The companion forwardly that is tied through warrants up 4% today to stop at $1 even. So that's the update on the stocks that we always want to cover, and I know people are mostly interested in. That so far, the black line is TSNP up 823%. And isn't it interesting that the majority of the value I think we all mentally have is in TSNP, which is humble. And we tend to think as forwardly as the bastard stepchild, so to speak. And yet, because it was coming from a smaller base, forwardly is up on a percentage basis higher, 1,271% from the beginning of the year. And if that doesn't get you excited about investing, folks, then you're going to have to find something more exciting, because that's about as exciting as it gets, I think, in the world of investing. Now, I've talked about some other stocks, and I want to spend a little time on some other things and just to revisit some of the stuff that we've talked about here before. One of the themes for 2021 is that we are going to be coming out of the COVID crisis, and as not just the United States, but the whole world. And that means that there's going to be some turnaround plays. I would have you look at a number of things, perhaps airlines you might look at. One of those, which is actually a cheap stock, Rolls-Royce. I apologize, I'll do a different story on that. But the Rolls-Royce engines, they make engines for jets. So that might be one turnaround. They're about in the area of $1.40 or so, the dollar, Rolls-Royce engines. So that's one. The other, and I have talked about this, and let's revisit this, is oil. Now, oil over the last number of years has gone down, down, down. So it's been a bad, especially in the last year, of course, with the shutdown of the world economy. But as we can see here, we have oil, and I'm investing in oil, and I own DIG. I'm buying DIG, D-I-G, you see up here in the left-hand corner. That's the blue line. And DIG is up for the year, so far in the year, 33%. Now, DIG is a turnaround. It's currently priced at $97. It also, by the way, has a 3% dividend. So while you're waiting for it to go up, you're going to get somewhat of a dividend. It does have a 1.95% fee. I'll round up to 1%. My price target on DIG, which is now $97, is $120. Can it go higher? Yeah, I think it could go even higher. But I think we're going to get up to 120, which is less than half of where it was before COVID hit. And in the early part of January 2020, DIG was at $258 a share. As I say right now, it's at $97. The world economy is going to have to reopen, and that's one of the turnaround plays. Another one, by the way, is Disney, and Disney came out today with their numbers, and they were up dramatically. I don't have their chart right here, but Disney is picking up a whole lot of subscribers. They're at $190 is, let's say $191 is where Disney ended today. In after hours, they're trading up $5.90. So that's another 3%. So Disney posted earnings that beat the expectations. And they had, I believe it was like 94 million for their streaming services. So that's going to be a turnaround play as well because, of course, they have parks around the world, and those parks will also be reopening. But through this crisis, Disney has been doing well. I apologize for bouncing back and forth. Let me go back real quickly to, I just wanted to say on the dig here. Dig, as you can see, is up for the year thus far, not for a year, but just in 2021. And that's where the purple line down here is the S&P 500. The other thing, and I'll leave it at this, I've talked about leveraged investments, and here we go up to compare. When you buy, if you're holding the S&P 500, which is not a bad thing, but I would encourage you to look at the leveraged versions of these indexes. Now they go down faster, but they also come up faster. So thus far in the year where the S&P is up 4%, you see that the UPRO, which is 3 times the S&P leveraged index, is up nearly 13%. If we go out 2 years, you can see that the UPRO, which is the gold line there, the yellow line, bounces up and down a bit, whereas the purple line is the S&P 500. So there's a lot more volatility in these leverage indexes, but when you look at the returns you're getting over a longer period of time, the S&P over the last 2 years is up about 44.5%, close to it, while the UPRO, the leverage version of the S&P, is up right at about 100%. And if we look at a 5-year chart, and I always like to look out over 5 years, you can see how much more pronounced that fall was in the UPRO. So you have to be willing to put up with some volatility, but if you're going to hold it for a longer period of time, you're going to get a bigger rate of return unless the market just tanks and stays down. So over the last 5 years, the S&P 500 is up about 110%, whereas the UPRO is up 451%. What I recommend is that we do both, that we have some in these leveraged indexes, and we also put money into some stocks that we think are going to be winners. So that's the way to play it. Right now, of course, we have a winning combination, I think, with TSNP and Forwardly, and we'll be looking for other stocks to buy in the meantime. If you like this video, folks, give me a thumbs up, become a subscriber, and we're going to talk about a whole lot of stocks as we move forward through the year, but we're going to be holding on to Forwardly and TSNP for, I think, quite some time, and I think we're going to be racking up some significant profits. Until we see each other again, good investing, everyone.